And we are live. It is Martin Luther King Day, January 2026. And we are taking a look at the markets here. The futures markets were open overnight. As we will take a look here, we'll start with the S&P futures because the markets were open overnight. And basically, from what I can tell, is that the news over the weekend was that on Saturday, Trump posted some commentary, I guess is the word to say, commentary on Truth Social, saying that he is going to or wants to or will, whatever, add 10 to 15% tariffs on various European countries if they do not allow the United States to buy Greenland. We have a lot of back and forth rhetoric going on right now when it comes to what's going on with Greenland. And whenever Trump discusses or mentions or talks about the possibility of future tariffs, there's always a immediate negative reaction to that. So as you can see, taking a look at this chart here, 1 minute chart, the S&P futures contracts overnight, you see an immediate gap down on Sunday evening, and the futures traded overnight and closed the session today at 1 p.m. Eastern Standard Time, and they immediately gap down, pricing in that news from what Trump said regarding Greenland. And basically, after this gap down, from this point when the futures markets open, taking a look at the S&Ps, they really didn't do anything. They just kind of just traded sideways throughout the night. It looked like around 3:30, 40 in the morning, there was some heavy selling. There was some more selling that came in at the 9 a.m. hour this morning. But at a certain point, some buyers stepped in right around 9:40, and we closed the Martin Luther King trading session right at 69.13, slightly lower than where we gapped open on Sunday night during regular trading session hours. That will start trading at 6 p.m. Eastern tonight, which it will already start trading by the time you watch this video. But we will see how the market acts after the Tuesday trading session and Tuesday evening session acts based off of this bounce that we had during the late morning hours. Looking at the S&P futures here, I think that we can have a little bit of a bounce. I think that any news that is associated with tariffs, it jitters the market, and it immediately has just a reaction to price in the worst possible scenario right away, and then it continues to go forward and look for better news and better opportunities. But it has to immediately price in the bad, negative, doomsday scenario when shocking news, tape bombs is a good way to say it, come out. And these tape bombs, whether they come out when the market is open or the market is closed, they have to then, the doomsday worst case scenario gets priced into the market, and then the market goes from there and says, okay, the world's going to continue to spin. Let's take a look and see if there are some buying opportunities. So once you get this immediate bam, okay, gap down, reaction down. Okay, now let's see if there's some buying opportunity. And the market kind of normalizes to a certain extent. And we'll see if that normalization process continues into the Tuesday trading session. Let's take a look at the NASDAQ. Down, as you can see, just a little bit more than the S&Ps during the Martin Luther King trading session. The S&Ps closed down about 0.91%. The NASDAQ traded down even more, over 1%, down 1.13%. And as you can see, the gap down and then the big selling that came in, just like the S&Ps had, but a relief rally as we came into the end of the session. And we will look to see if how this continues during the overnight session. And then once we get some reaction from the overnight session, when the regular trading session begins on Tuesday, it'll be very interesting to see, after all the trading that the futures markets have had, whether or not stocks even care. I mean, they may just have a gap down from the news and then bam, they just start rallying viciously. We'll see. That can easily happen. So just because the futures markets are down during this holiday trading activity doesn't mean that the stocks are going to continue to act that way. It's not like they're going to just, okay, open down and they continue to trade down. The fact that we've seen this rally here during the morning hours in both the S&P and the NASDAQ, that kind of indicates to me that you could have stocks open lower on Tuesday morning at the opening bell, and then right away from there rally. And you could end the day green. Who knows? We'll see what happens. And during the Tuesday overnight session, in a couple hours, when that overnight session opens, you can see the futures continue to rally, and we could be back right where we started last week. So, it's all up in the air. We'll see what happens, but how this tape action plays out will dictate, how aggressive I am as far as looking for trades. One thing that I did do before the close on Friday was buy some call options in Rocket Labs. The reason for that purchase in call options was strictly because I was thinking, with everything going on in the news, I'm just gonna, throw it out there that something could happen, and I don't know what or how it's gonna go down, but something regarding the military, whether it would be Venezuela, something with Venezuela or something with Greenland. We'll see what happens. And so ahead of the long weekend, I bought some Rocket Labs calls. And we'll see how it plays out. But my thinking looks to be spot on, as we did have news about Greenland and tariffs over the weekend. And the fact that Trump is continuing to tweet about or continuing to post about it on social media means that he's still, pushing this, and this idea that there's risk on the table and there could be some type of military activity in the future. Hopefully this is bullish for defense stocks. Rocket Labs is a stock that I've been following. I've traded before, so I just it was getting late in the day and I had to make an executive decision. So I just bought the at the money calls that expire on the 30th of January. Gave it a little bit of time. And I bought these calls right here, right at the 96 strike. So we'll see how those play out on on Tuesday, and they are expensive calls as the volatility, implied volatility is at 99%. And I really need a move that is greater than $13 to $14 over the next couple days to really cash in on those options. But one thing I am thinking, if we get a big pop when the market opens on Tuesday, at the cash open on Tuesday, and I get a nice pop, $5, $6, $7, $8, $9, $10 on Rocket Labs, I am going to close these calls and then take that money and buy calls in Karman. Rocket Labs is a defense stock, aerospace defense stock, but they focus on rockets that go to space. So it's not necessarily a stock that is focused on military type of defense. Karman is a company that is based in Southern California, close by Rocket Labs, and most of their business is focused in heat seeking. Their business is focused and involved in supersonic missiles, whereas Rocket Labs' main customers are companies like SpaceX. Now, did I screw up, you know, ahead of the weekend buying calls in Rocket Labs? That is not a company that is not super involved in the military part of aerospace defense? Maybe. Easily, yeah. But a lot of times, and I'm going to talk about this for any newer traders out there, a lot of times, you got to make a quick decision. I need an aerospace defense stock. And Rocket Labs is a stock that I'm familiar with. And even though it's not super concentrated and focused on military aerospace defense business, the fact that I'm familiar with the stock, I know the implied volatility, I know how it trades, and it will move along with the other aerospace defense stocks. And I'm also betting that all the aerospace defense stocks, not just Karman, not just Rocket Labs, but all of them will all move up in tandem if there is positive news on some type of military activity or whatever, and expecting that Trump could say something over the weekend. And sure enough, he did. So that was the thinking. And when it comes to trading, sometimes you don't make the best decision all the time, but trading is an activity that teaches you how to think quick on your feet. Yeah. On Friday, it was literally like 350. I'm like, oh, I gotta, put on a trade for the weekend, regarding, some type of Trump announcement with Greenland or Venezuela or something. And I just immediately said, okay, I gotta buy some calls in the defense stock. Okay, Rocket Labs, boom. I put it on. I was busy texting like 2 or 3 people at the time. And it was like right at 3:50 in the afternoon. And in hindsight, I probably would have bought calls in Karman instead. But my thinking was Rocket Labs is an aerospace defense stock. It will move with all aerospace defense stocks if there's some type of news that comes out over the weekend. And the news regarding tariffs in Greenland happened. So, this is no guarantee that we're going to have all the aerospace defense stocks open higher on Tuesday, but I think the odds are that they will. And so my thinking is if there's a good open in Rocket Labs, I'm going to close those calls and then look to buy at the money calls in Karman. Now, here's another interesting thing. This stock does not have the same liquidity as Rocket Labs. So sometimes you have to trade a less favored name, especially if you're doing options, because the liquidity isn't there. We go back and take a look at Rocket Labs. This is a very actively traded stock. First off, this stock has weeklies. Okay. It has weekly options. And take a look at these weekly options. You see it's the 40 to 50 cent bid ask spread at the money options. And you know, it's not too bad. Karman, no weeklies. You see, you're stuck with the monthlies. And so, if I have to buy a close dated option in Karman, I got to buy these Februaries that have 32 days to expiration, which means that I'm not buying an option that is inside of 21 to 2 days to expiration, which means I'm not going to get the gamma that pushes an option high very quickly if the stock moves quickly, if the news is in my favor. So, thinking out loud here, even though I like that Karman is a company that is exposed to the military defense complex versus Rocket Labs, which is more exposed to the space defense complex, I may just stay with Rocket Labs if I'm going to keep buying calls. And maybe Karman is a name that I just buy shares in. So I may roll up the calls in Rocket Labs, assuming that they gap up higher on the news from Trump and tariffs in Greenland. And maybe just buy like 100 shares of Karman to go with it. Thinking out loud, I think I may do that because Rocket Labs is exposed and they do business with military defense companies and so forth. So they are involved with the government in making parts for missiles and so forth, but it's not as much as their for their business as a stock like Karman, which is more focused on like making missiles and stuff, specifically like supersonic missiles and so forth. So I'm gonna probably, thinking out loud, roll up those calls in Rocket Labs. I will sell the calls that I have and then buy whatever calls are at the money for the 30th of January. And then I'll buy a position in Karman and just hold those shares. As long as this story is taking place in the market and in the world, I'm going to probably hold on to this trade. Roll up the calls in Rocket Labs and hold on to the shares in Karman. Now, going back to the SPY, and we zoom in here, taking a look at the SPY, and it is trading in what could be described as a new sideways range. We had this ongoing sideways range for about 3 months, give or take, where the SPY traded back and forth right around 73 level as a central midpoint. And we recently, in 2026, have broken out above this resistance level, and we are holding above it, but trading in another sideways range above this ceiling here. So, continue to grind higher, and we're above this range that we're trading in, but we're not going higher with a lot of gusto. And we could trade back to this, now it's support level. It was resistance, now it's support level, and trade around there but stay in this new sideways range going forward. The momentum is kind of declining. We're getting higher highs recently, higher high, higher high, trading above the resistance. Now it's become support. And in the same regard, you see the rate of change here and the 310 oscillator is making lower highs. And that is a clear divergence, and it is something to respect going forward, that we can continue to trade in this sideways to grinding higher type of tape action. However, the momentum is declining. And so eventually, if we continue to grind higher in a upward to sideways type of tape action, eventually you're going to get a big down move if the momentum continues to decline. So thinking out loud, and as I look at the charts, thinking out loud as I look at the charts, I am not too inclined to go in aggressively and just buy calls willy-nilly, or I'm now less inclined to buy in shares that I have less conviction in or are breaking out as I look at this chart here of the SPY grinding higher but losing momentum. Because it can easily go higher, 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 sideways, higher, higher, up towards this upper Bollinger Band over the course of multiple trading sessions. But then something happens, you get a big down day, and boom, you give up all that gain, and then you can get another down day, and before you know it, you're at the lower Bollinger Band, somewhere right around 680, and you're negative on the year, and momentum is then oversold, and it's time to buy something. So you have to be very, very picky, very, very choosy, very, very picky when it comes to looking at stocks to buy. Let's take a look at the Qs. We see here very similar tape action, but yet different tape action. As you can see, Qs here have this, triangle that is formed, and they, just like the SPY, kind of grinded higher, broke out to the upside, but still in a sideways type of range. And you can see they're not making new highs, and momentum is declining gradually. And the tape action in the Qs supports what we see in the SPY, that the market is trying to get its wings and go higher, but it just can't quite get a hold of, it can't quite get its wings as the momentum is kind of dragging down. And basically, when you look at this momentum, and as you look at the chart here, it's showing that money has moved out of the big cap tech stocks, not just the Max 7, but other big cap tech stocks that are quite as large as the Max 7. But when you look at other indices like the Russell, you can see here, look at this, all-time highs. We get a clean breakout here right as we started the year, clean breakout from the highs in 2025, and we continue to go higher. Trading right up against this upper Bollinger Band as the Bollinger Band expands to the upside. This is tape action that is very bullish and has a lot of gusto behind it. You get strong upward thrust and momentum, and then we continue to go higher as momentum kind of just levels off. And that sets up for another up thrust and momentum to retest the momentum high that we had on January 8th. We may come down for a day or two and then bam, get another up move, and then momentum makes another thrust higher. And the longer term momentum is trending higher as well. So yes, you're going to get like, you know, balls and momentum and tape action, but as long as you have like a trend that's going higher with higher highs and this stair step action that's shows a lot of gusto. When you get the momentum rising and the Bollinger Bands expanding like this, this is very, very strong. And even though we are extended and due for a pullback, any pullback with this type of tape action is a bicycle. So this is very clear when you compare the IWM to the Qs and the SPY. It's very indicative. It's very clear what's going on. It's a rotation market right now. Because if you continue to look at indices, and we look at the semiconductors, same thing. So to say, oh, money's rotating out of tech, that's BS. That's not happening. Money's rotating out of the Max 7, which are mostly tech. So, but as a whole, money is not just leaving tech stocks as a whole. You can see it like Russell higher, SMH, the semiconductors are higher. So tech stocks are going higher, just not the Mag 7 tech stocks. So, you can see it very clear here. Looking at the semiconductor ETF, we break out of new highs at the beginning of 2020. We get this expansion in the Bollinger Band. We get this upthrust in momentum and, new highs. And this is very, very aggressive action to the upside. Now, we did get a nice little move up in momentum. We'll see if that continues. We really need to see an up move in momentum, another up move in momentum on these oscillators to confirm that this move can continue. Because what could happen is, we go back to the Russell. What could happen is that this momentum can kind of decline, and you can see it decline here in the SMH, and then money can come out of some stocks and go into the big cap tech stocks. So, with all that said, we'll see how this plays out. But right now, it's looking, as long as we can get another upthrust in momentum and continue to trend higher, and if any pullback we gets bought, this tape action can continue with the Russell 2000 going higher, the semiconductors going higher. And with all that said, let's go back to take a look at the Mag 7 ETF. Again, it's not like it's super bad tape action, okay? It's not like, all hell is breaking loose. It's just that it's stagnating out. We made highs in the Mag 7 in late October. We had a normal sell-off. We held lows. We held this swing low that we made here on October 14th. And we bounced off of those, but we didn't make a new high. Sold off to the 20. Tried to muster another rally. Didn't make a new high. And we have just kind of traded sideways since the beginning of the year. All that happened as all that's gone on, just like the SPY, just like the Qs, the Max momentum has been declining. And money has gone into the small caps, the chip stocks, and other sectors as well that I will talk about in a moment. And as you can see, lower highs, lower lows in the momentum, and the slow line is trending lower. Now it's negative, it's below zero. So, what are other sectors that the market has gone into? And It doesn't take a rocket scientist to figure out that money has gone into metals. As we have seen this move here in metals, taking a look at the gold ETF here, and it has just been crazy, just ripping higher. And all these pullbacks are very, very pretty. From a technician point of view, they're just pretty formations. You get this nice move up, you get a climactic top, and then you get this consolidation period, and then bam, a breakout, an early stage breakout followed by a normal breakout, and we get another move higher. Every pullback to the 20-day is bought, and it's just very pretty. You get this long, broad base before you get this move up, and then you get this nice little cup and handle type of pattern here. Zoom in here, you see this nice little cup and handle type of pattern that sets up for this run up. Then we get a pullback to the 20-day, it gets bought, and we are at new highs. You can actually see, if you take a look at, this is the gold ETF, so it's 1/10, close to 1/10 the price of gold. If we take a look at the gold futures contract, it's much more visible. The chart is almost identical, but it's much more, this chart's much more fluid because it's more liquid with the futures contract. And you can see these formations, and you can see this chart just, it's just really pretty. But this recent move, we're starting to get a consolidation here in the momentum oscillators. So uh, it shows that, it's not necessarily bearish, because the slow line is higher, fast line, they're not making lower highs necessarily. The only real thing that sticks out is that these highs are starting to not be as strong as they were, and they're not as high as this upthrust in momentum when we had this climactic trading activity at the end of October. All that being said, you get this move up, get a consolidation period, get another move up. It makes sense that we have another consolidation period before a move higher. So yes, in the short run, it makes sense that you have some type of consolidation period in gold after the recent run. But there is nothing here in these charts, looking at gold, that show that it's gonna switch into some super bearish activity. You really need like momentum to roll over and get a lower high, and then go down negative on the rate of change, and the slow line to really turn negative and go towards the zero line, and then the fast line, the 310, to really follow that down, and test and trade below this low here in the momentum. So we'll see how this plays out, but there isn't really anything beyond expecting a short-term, natural, normal correction in gold that says that this is gonna, end. Looking forward, this is gonna continue, only with some type of normal, natural correction with it. Now let's take a look at silver, the other metal that is so loved by everyone. This is a crazy parabolic move. And this up move in silver, from an economic point of view, concerns me more, because silver is used in so many different things. And a high price in silver can cause a lot of negative, unintended consequences. We use, silver in so many things. Like, I heard that there's like 30 pounds of silver in just a single heat-seeking missile or something like that. It's crazy. So, you can think about it yourself, and so many things you use silver in. The fact that silver is running up like this, it can have some backlash effects in possibly our day-to-day life if this move continues. You think about it, silver was trading for close to $40 an ounce in August, and now it's $90 an ounce. That has to have some type of effect in you know in how things what things cost in the day-to-day global economy. And you have to think about, when does that actually have an effect? So this is something to keep an eye on. And looking at these charts in silver, there's nothing to me that shows that this bull market can't continue without, you know, exception of a, normal natural correction. I think that it can easily pull back to $79 here. We're at the upper Bollinger Bands expanding. It would make sense for silver to come back to 79 to $80, test this 20-day moving average, and then it can easily, after that, spend some time going sideways. And by mid-February, you know, start making a move up above 90 and maybe go to $100 an ounce. That makes perfect sense to me. So, you know, be careful. I think that there could be some wild type of events, news, and subsequent price action that can come because silver is making such a big move higher. This isn't good for governments, and this isn't good for the economy. So we'll see what happens. I don't have a time machine. I don't have a crystal ball, so I can't tell you exactly what's going to happen, but they gotta can't silver is not the type of thing that it can't just keep going to the moon, because it has such big impacts on the global economy. So we'll see what happens. And one stock that I've been talking about a lot recently is Bloom Energy. I have been following this stock for a couple months now. When the stock was at about 140 a share, I said I like the stock and I want to buy it, but I want to buy it on a pullback. And at that time, I said that it's a buy, at 120 or $100 a share. Well, it actually went all the way down to under $80 a share. And that was funny because I got a lot of pushback. I got some, what's the term? I got some, uh, heckling, some, blowback on various videos. Oh, good job. That's 140 stock. Now it's at 80. Good job. You know what you're doing. That's what kind of stuff, I got. Some people said, oh, you said to buy Bloom at 140. Now it's at 80. Great call. So that's the kind of feedback that I was getting. And I just said, I'm still on it. I'm bullish. And now the stock's close to 150. It is breaking out to the upside with testing this all-time high that it had in early November. I think it's very makes a lot of sense that Bloom does some type of back and forth sideways action. It can form some type of handle here, right around 140 to 150, and then have another breakout type of move at around 150 to 155. So that makes a lot of sense. I like how the long-term momentum is now trending higher. We're starting to come down after making this high. So it makes sense that we have some type of pullback, form some type of consolidation, a handle type of thing with this cup, and then have another follow through to the upside. The thing about Bloom is, yes, the technical action is shaping up to be bullish and positive, but Bloom is, to me, a story stock more than some type of technical strong setup. Bloom is more of a story stock than anything, rather than a strong technical setup in a bullish chart. because at the end of the day, the thesis with Bloom is that they have two large customers and another semi-large customer in CoreWeave, Oracle, and American Electric Power. Let me double check that here. I have to double check that. That's it. American Electric Power. Those are the three main customers for Bloom Energy. And the story for this stock is that they can create these fuel cells that can be installed in a data center in less than 90 days. I've heard stories that they can hook up a data center and have it running with their fuel cells in less than 60 days. And right now, CoreWeave, Oracle, and American Electric Power are kind of the beta test, if you will. They are the practice run. They want to, other hyperscalers want to see what type of results that these companies are getting when enough time goes by where they're getting great results from Bloom Energy. Number one, CoreWeave, Oracle, and American Electric Power are going to invest more into these fuel cells. And then other companies are going to come along, other hyperscalers specifically are going to come along, and they're going to invest in Bloom Energy. And if all this happens, if this story plays out over the next year or two, like I just described, there's not a lot of other alternatives, you know? So that's why this story makes a lot of sense to me. If all this plays out over time, it may play out in 6 months, it may play out in a year, 2 years. I don't know. But if this all plays out, you can easily see as they add new customers over time, earnings estimates go up 100, 200, 300, 400, 500%. And you can easily see a move in the stock up another 2, 3, 4, 500%. It won't happen overnight. The story needs to play out. The fact that this thesis, the fact that this story, as Peter Lynch described when he was at Fidelity, the fact that this story is the basis for the trade, the investment, it makes me a lot more bullish in this stock. And it allows me to be a lot more patient in this stock. And even though we may have another pullback, we may have different type of formations, cups, handles, breakouts, and so forth in the stock, I'm going to still hold on to the shares as long as the story and as long as the thesis stays intact. So I think it is at a buy point right here, right around 150. Even if the stock pulls back and forms some type of handle, I think you can buy it anywhere around there. And you can buy more even if it trades above 150 and has follow through to the upside after forming a handle. And it may not form a handle, it may just keep going to 160 or 170. I think over time, Wall Street analysts are going to become wise to the fact that there's a lot of potential new customers. Think personally, they probably already are wise to it, but they're reluctant to put in a lot of capital and to buy more shares because they want to see proof of concept. They want to see customers really commit more to the fuel cells before they recommend the stock. And the reason why they need that proof of concept, because these guys got to schmooze and booze clients and they don't want to look stupid in front of them in case, some customer backs out or something. And they don't want to lose their jobs. So there's that career risk. And that type of dynamic makes it so that they need confirmation. They need real confirmation. They can't go on a limb. The story, the thesis that I'm describing is kind of going down on a limb. But if I'm wrong, then I'm wrong. I keep find another trade, whatever. These analysts and these traders that probably know and understand what I just described. They need more confirmation to confirm to their clients, to their investors, that this stock can easily go up another 100, 200, 300%. But be ready, because when more customers come along, as this bottleneck in energy continues to play out, and Bloom Energy is there to solve that problem, you could wake up one morning with like somebody saying, "Oh, this hyperscaler is investing X amount in Bloom Energy, and the stock could be up by huge amounts." But that could happen, months from now. Who knows? So that is all I have to say about that. And that is it for today. Good luck trading, everyone. This is not the easiest market. I think there's lots of good individual stock ideas, but the market as a whole just seems very lackluster. So take care, everyone. Bye bye.